Here's a question most successful people do not like asking. If something happened to you tomorrow, not emotionally, not perfectly, not forever, just practically, would they know what accounts exist, what bills are due, who to call, where the documents are, how income comes in, how taxes get paid, what insurance is in place, what decisions need to happen first? For a lot of families, the answer is no. And that is not because anyone has failed. It is because modern financial lives are complicated. There are multiple accounts, there are investment portfolios, business interests, insurance policies, automatic payments, estate documents, password managers, tax professionals, attorneys, advisors, you name it. The plan may exist, but the operating system may not. In most households, one person becomes the family CFO. They know the accounts, they talk to the advisor, they know where the insurance policies are, they understand the business finances, they even remember when taxes are due. They know which credit cards pays which bill, and over time that knowledge quietly becomes concentrated. This is especially common in successful families because complexity grows gradually. There's one new account, one new investment, one new insurance policy, one business interest, one rental property, one estate document, one new login to add. And nobody stops and says, could someone else understand all of this in a crisis? Because apparently, life does not send a pop-up notification that says, your financial life is now too complicated for one human brain. Although honestly, that would be a helpful feature. And this is how financial knowledge becomes a single point of failure. Not because someone is hiding information, not because the family is irresponsible, not even because anyone did something wrong, but because nobody built a system. Now, when I say this, a lot of people immediately think, we have estate documents, Jay. Good, you should. A will matters. Powers of attorney matter. Healthcare directives matter. Trust may matter depending on your situation, but the estate documents and financial continuity are not the same thing. An estate plan may say who has authority, but it may not tell them what exists. It may say where assets go, but it may not explain how the cash flow works. It may name decision makers, but it may not tell them who the CPA is, where the insurance information is, which accounts are taxable, which bills are automatic, or what to do in the first 30 days. Now folks, that gap matters. A legal plan can transfer authority, but an operating plan transfers clarity. And in a stressful moment, clarity matters. Because grief is not a great time to start reverse engineering the family balance sheet. Nobody wants to be searching through a junk drawer, trying to figure out whether the life insurance policy is under important documents, random mail, or somehow Disney receipts. When one person runs the financial life and something happens, 3 problems usually show up. Problem number 1 is simply access. Can the right person access what they need? Accounts, documents, insurance information, business records, tax returns, advisor contacts, estate documents, passwords, or secure access instructions. Without access, even good planning can become frustrating. Problem number 2, understanding. Access alone is not enough. Someone may have the documents, but not understand what the heck is going on. Which account funds the lifestyle, which assets should not be touched, which bills are critical, which insurance policies matter, which advisors should be contacted first, what decisions are urgent, and what decisions can wait. In a crisis, not every decision is equally important. Problem number 3, authority. This is where legal documents and planning need to connect. Who is allowed to act? Who can sign? Who can speak with financial institutions? Who can talk to the CPA? Who can make healthcare decisions? Who can make business decisions? This is where you need the right legal guidance. But from a financial planning standpoint, the key is making sure authority and information are not living in separate worlds. A lot of families have one or two of these. They may have access, but not a clue on what's going on. They may have documents, but no clear contact list. They may have authority, but no idea where to start. That is why the system matters. So here is the test. If you are unavailable for 30 days, could your family keep the financial life running? Could they pay the bills, access cash, know who to call, understand what income is coming in, know what debt payments exist, find insurance information, identify the investment accounts, know which decisions should wait, and know where the estate documents are? Could they understand what business obligations exist? If the answer is no, it's not failure, folks. That is a fixable planning gap. Here's what a basic family financial operating system should include. An account map. Not account numbers on screen, not sensitive information casually floating around, but a clear map of what actually exists. Bank accounts, investment accounts, retirement accounts, business accounts, insurance policies, debt obligations, real estate, and maybe even some private investments. Number two is a key contact list. Your financial advisor, your CPA, your estate attorney, your insurance professional, your business attorney, banker, trusted family contact. In a crisis, the family should not be guessing on who matters. Number three, a cash flow map. What comes in, what goes out, which bills are automatic, which bills need action, what expenses are essential, what can wait. Number four is document location. Estate documents, tax returns, insurance policies, business agreements, loan documents, real estate documents, employee benefit information. And number five, a decision guide. This may be the most important. What should happen immediately? What should not be rushed? What accounts should not be touched without advice? Who should be called before any major decision? Because the goal is not to make your family financial experts overnight. The goal is to prevent panic decisions. Now, this brings up a fair question. How much should your family actually know? And the answer is, as you would guess, it depends. Not everyone needs every detail. Not every child needs full financial information. Not every family member needs access, and not every document should be sitting in a folder labeled, "Please steal my identity," because security matters, privacy matters, and judgment matters. But someone needs enough information to be able to act. That may mean your spouse understands the overall structure. It may mean adult children know who to call, but not every financial detail. It may mean a trusted person knows where documents are stored. It may mean your advisory team has clear instruction. And it may mean your estate attorney updates authority documents. The right level of information depends on the family. But zero clarity is not a strategy. You do not need to share everything with everyone, but the right people need to know enough. And this is where Frame's style of planning matters, because this is not just about investments. It is not just about taxes or estate documents. It is about making sure the people you love are not left with confusion at the exact moment that they need clarity. So ask yourself one question. Could my family run my financial life without me? If the answer is yes, tremendous. If the answer is no, that does not mean everything is broken. It means the plan is just not finished. Because wealth is not just about building assets. It is also about building clarity for your spouse, for your family, for the people who may one day have to step in. A strong plan should not only work when you are there to explain it, it should still make sense when you're not there. If you want more conversations around business owner planning, tax strategy, investments, family continuity, and building wealth with intention, subscribe to the channel, and I'll see you soon. soon.